Good morning, all. Well, the market was actually able to come back yesterday. Was a little bit of a right here what we looked at yesterday. That little bit of selling that was going on, and had the immediate reversal there. I'd like to see what time that was. Let's take a look. Right from turned around right around the first reversal period, right up, took out the pre-market high and then pushed higher. So we're a little higher here this morning, but overall into this lower highs. Could be, the bottoming process. I talked about the fact that it was retesting this area for the third time, and so far it's followed through, but now it's coming up into this significant major resistance area here. And I don't subscribe to any of this trend line stuff because it's useless. Connecting dots and getting through a trend line, a meaningless projection of, what the dots you connected is not an area of resistance. So, let me get rid of the line here. It got through this resistance. The next focal point was here, and if there's anything there in reality, you have to go to, breaking down the intraday time frame. So as it got through here, and this is the momentum move, right? The big down bar, and there's nothing there. So once it got through here, right, the door is open to moving up into, right, this area up here, which is exactly where it is right now, and backing off from. So we'll see if it can continue to move higher. Nasdaq did quite a bit better, and that's knocking on the door here. Can it get through that all-time highs? The weekly, I mentioned, it was in an uptrend. The momentum is slowing. So we'll see if it can get through that. And the Dow, which had been outperforming prior to the correction starting, actually couldn't even get through. That's the futures. It couldn't even get through today up through this area here. And yesterday ended with a little bit of a topping tail. So now relative weakness. The transports came on strong. And after that breakdown failure. And this is, if you ever get caught in a situation like this, and if you haven't, you probably will. We all have at some point where, this was a sloppy break, but initially you had a gap down from a bullish bar. And then if you would have sold a breakdown and prices immediately reverse back up again, it's best just to stand aside unless you've share sized, for a stop up here. But if you're share sizing for a smaller area, just step aside, because breakdowns are supposed to follow through to the downside, not immediately reverse back up again. All right, oil, holding here this morning, but it was down again yesterday. It's in this area of support. So we'll be watching, to see if XLE, can actually make a bottom here. Whereas it tried last month, and then it obviously failed. And, so we'll see if oil can turn around, whether this can actually turn itself. Has broken through this support, and where it had been holding, we've got a little swing pivot down there. So sometimes it's an area, and so we'll just continue to monitor this day by day and week by week, and looking for, that sector to turn around. Because money usually rotates eventually into a weak sector, and we'll want to get in as that turn begins to happen. Gold broke out. It's got some resistance overhead here, but we'll see. Maybe it's getting ready to make a bigger move, but we're not too excited about it just yet, since it's got that resistance area right there. Now, more of a concern, as the market, if it continues to move up here, is that, it's starting to do that on weaker breath, and it's not a good sign. And this is the day-to-day breath. We usually don't look at that, but look at the lower highs here. Not a very good drawing a line there, but just look at yesterday. how small it was, and what happened here on this reversal. And the move down actually, well, it got extremely oversold, and that's bullish short term. The first time it comes down here after an upward move, historically it's been a sign of more downside or weakness to come. Because in a bull market, this is typically what it does. It comes down to 100, and in a super strong bull market, it reverses at the 0 line. So sentiment got slightly bullish on the move down here, and I'm sure that's what's helping the markets move up at this time, as those option traders get beat up as they normally do when they get a little bit too bullish. But for us to get a all-out bullish sign on this market, and the way things are going here, it's not going to happen because we need more of a downside correction. We would want to see sentiment up in the area of 1.2, not just at the lower part of this band, which adjusts with a bull or bear market, and it'll make give you a lower level in a bullish market. But after this type of breath, what we want to see is breath coming down here and sentiment super bullish up here, and a pattern like this with that alignment, and we would be looking to get long from weeks, if not months. So we'll see if that all plays out. And we've got some stocks that are getting beat up here this morning, and the damage that is happening in the markets. It's a minefield out there, and stocks. This SEM Tech, is getting pounded down here. There's a few others. Campbell Soup again. After a drop like that, and then wow, here's another. So you got to be careful. Have your stop losses in, have your line in the sand, or else you just don't survive in any market. DG, Dollar General, another move down here this morning, and just looking for something that actually might be up nicely, and Baba following through to the upside again after that pullback there to some support. So that's it, guys. Good luck in today's trading. Be careful, and don't get drawn into the hype of the media with every little blip to the upside in the market. The market's been going up for a long time. There isn't a correction going on underneath the surface. That's absolutely for sure. So, if you've got something like a BABA that's been performing extremely well, let's assume it breaks up above these highs here. If you could sell a covered call against that position, maybe even at 200 or what have you, it's an idea to consider to lower costs and hold on to a stock that's doing really well. All right, guys, good luck. We'll talk tomorrow.